Welcome back to Stocks Telegraph, your premier destination for insightful investment opportunities. Today, we're venturing into the often overlooked but highly rewarding realm of small-cap stocks. These are companies with market capitalizations typically ranging from $300 million to $2 billion, and they're known for their potential to achieve substantial growth. While they might not grab the headlines like the major tech behemoths, small-cap stocks offer unique investment opportunities. They're agile, often under-researched, and have the capacity for significant gains as they expand and innovate. However, this potential comes with a higher risk profile, making thorough research and due diligence essential. In this episode, we'll be highlighting 5 small-cap stocks from various sectors that demonstrate solid growth prospects. These companies are not just surviving in their respective industries but are positioned for future growth, backed by strong fundamentals and innovative strategies. Investing in small-cap stocks can be both challenging and rewarding. It offers the excitement of uncovering hidden gems that might become tomorrow's market leaders. So, whether you're an experienced investor or just starting out, let's explore these top 5 small-cap stocks that are set to make significant strides in the market. Remember to hit the subscribe button and ring the bell for notifications to stay updated with the latest investment insights from Stocks Telegraph. Now, let's delve into these small-cap stocks that are poised for growth. The first stock on our list is Adma Biologics Inc, trading under the ticker ADMA, which represents a promising opportunity in the small-cap biopharmaceutical sector. Known for its manufacturing, marketing, and development of specialty plasma-derived biologics, ADMA has shown remarkable performance and growth metrics that make it an attractive investment option. In the last 30 days, ADMA has witnessed a performance growth of 27.53%. Underlining its market resilience and growth potential. The company's financial health is further evident in its gross margin of 30.44%, a strong indicator of its operational efficiency. The earnings per share growth for Adma is particularly striking. This year, the company has seen an EPS growth of 91.67%, with an even more impressive projection of 690.91% for next year. These figures reflect Adma's robust trajectory and its promising future in the biopharmaceutical landscape. Another key aspect of Adma's growth is its quarterly revenue and earnings growth, which stand at 63.72% and 114.49% respectively. These numbers are indicative of the company's successful strategies and its increasing influence in its market segment. Adding to its growth story, Adma recently announced that the U.S. Food and Drug Administration, FDA, approved its 10th Adma Biocenter facility in Laurel, Maryland. This development is significant as it not only marks the operational expansion of the company but also aligns with its objectives for self-sufficiency in plasma supply, ongoing revenue growth, and enhanced profitability. Adma's CEO Adam Grossman emphasized that this FDA approval supports the company's growth objectives and enhances its profitability outlook. The move towards plasma supply self-sufficiency is a strategic step that positions Adma Biologics Inc for sustained success and growth. For investors eyeing the biopharmaceutical sector, Adma Biologics Inc offers a compelling blend of strong growth metrics and strategic advancements, making it a small-cap stock with solid growth prospects. The next stock is Hims & Hers Health Inc, trading under the ticker HIMS, which stands out in the telehealth sector, offering a dynamic and consumer-centric healthcare platform. This small-cap company has demonstrated commendable performance, backed by strong financial metrics, making it a noteworthy investment choice. Over the last 12 months, HIMS has showcased a performance growth of 32.99%, reflecting its market strength and growing acceptance of telehealth services. The company's financial efficiency is evident in its impressive gross margin of 80.04%, which is a key indicator of its operational effectiveness in the healthcare industry. The earnings per share growth for HIMS is a significant highlight. With an EPS growth of 60.02% this year and an anticipated growth of 69.91% for the next year, Hims is on a path of robust financial performance and market penetration. Quarterly metrics further underline the company's growth trajectory. Hims has reported a quarterly revenue growth of 56.52% and a quarterly earnings growth of 60.78%, indicating strong demand for its telehealth services and effective business strategies. In its recent financial report for the third quarter of 2023, Hims & Hers Health announced substantial revenue growth, with revenues climbing to $226.7 million, up by 57% year-over-year. This increase is coupled with an improved gross margin of 83%, up from 79% in the previous year. highlighting enhanced operational efficiency. Notably, the company has successfully narrowed its net loss to $7.6 million in the third quarter of 2023, from $18.8 million in the third quarter of 2022. This improvement is also reflected in the positive swing in adjusted EBITDA, which stood at $12.3 million for the third quarter of 2023, a significant turnaround from the $6.1 million in the same quarter of 2022. For the full year 2023, Hims & Hers Health is projecting revenue in the range of $868 million to $873 million, with an adjusted EBITDA of $43 million to $46 million. This forecast reflects the company's confidence in its growth trajectory and operational efficiencies. For investors looking at the telehealth sector, Hims & Hers Health Incorporated offers a compelling combination of strong growth, operational efficiency, and innovation. Its robust financial performance and positive market trends make it a small-cap stock with solid growth prospects. The third small-cap stock on our list is Rover Group Inc, trading under the ticker ROVR, which is redefining the pet care industry with its innovative online marketplace. This small-cap stock has shown remarkable growth and financial performance, making it an attractive investment opportunity for those eyeing the pet care sector. Rover has had an impressive year-to-date performance, with a growth of 129.16%. This remarkable growth indicates strong market acceptance and the increasing demand for online pet care services. The company's financial efficiency is reflected in its gross margin of 75.32%. This high margin is indicative of Rover's operational effectiveness and its ability to generate significant revenue relative to its costs. Earnings per share, EPS, growth is a standout feature for Rover, with an increase of 180.21% this year and an anticipated growth of 66.23% next year. These figures demonstrate the company's robust financial health and potential for future growth. Rover has also reported solid quarterly growth figures. The company's revenue grew by 30.16%, and its earnings saw a substantial increase of 164.15%. These metrics showcase Rover's expanding market reach and operational success. In its financial results for the third quarter of 2023, Rover Group Inc. reported a significant 30% increase in revenue, reaching $66.2 million, up from $50.9 million in the same quarter of the previous year. This growth is a testament to the company's expanding customer base and its effective market strategies. Notably, Rover achieved a GAAP net income of $10.5 million in Q3 2023, a remarkable turnaround from the net loss of $15.5 million in the same period last year. This positive shift in net income underlines the company's improved profitability and financial stability. Adjusted EBITDA for the third quarter of 2023 was $17.5 million, significantly higher than the $10.2 million reported in the third quarter of 2022. Further emphasizing the company's operational efficiency and profit-generating capabilities. For investors interested in the growing pet care market, Rover Group Inc. presents a compelling investment opportunity. With its impressive growth, strong financials, and innovative business model, Rover is a small-cap stock with solid prospects for continued growth and profitability. Next up we have OPRA Ltd, operating under the ticker OPRA in the Nasdaq market, is a key player in the web browser industry. Despite its modest global market share, the company's financials exhibit robust growth and potential, making it a noteworthy small-cap stock. OPRA's performance over the last 12 months has been outstanding, with a growth of 170.52%. This impressive figure highlights the company's resilience and adaptability in the competitive tech market. The company maintains a healthy gross margin of 52.57%. This margin is indicative of OPRA's efficient cost management and its ability to maintain profitability amidst competitive pressures. A significant highlight for OPRA is its earnings per share, growth of 571.35% this year. This phenomenal growth rate showcases the company's strong earnings potential and financial health. OPRA's quarterly earnings have also seen a considerable growth of 127.83%. This growth is a testament to the company's continued operational success and its ability to attract and retain users. Investors will find the dividend yield of 6.37% particularly attractive, as it demonstrates OPRA's commitment to returning value to its shareholders. Despite holding a smaller share of the global browser market, at 3.31%, behind major players like Chrome, Safari, and Edge, OPRA has consistently raised its revenue by over 20% year-over-year for 11 consecutive quarters. This consistent revenue growth underscores OPRA's strategic positioning and innovative approach in the browser market. OPRA's stock is currently trading at around 15.4 times trailing free cash flow. While this multiple is low for a company exhibiting such rapid growth, investors are advised to exercise caution. The tech sector's dynamic nature means user preferences can shift quickly, potentially impacting OPRA's revenue streams, particularly if it relies heavily on advertising. In summary, OPRA Limited presents a unique investment opportunity in the tech space. Its impressive financial performance, combined with a strong growth trajectory, positions it as a small-cap stock with solid growth prospects, particularly for those interested in technology and internet services. The last small-cap stock on our list is Applied Digital Corporation, trading under the ticker APLD, is a forward-thinking technology company specializing in data center operations, crucial for today's computing power needs. This small-cap stock is gaining traction for its impressive growth metrics and future potential. The current price of Applied Digital's stock is $4.39, with analysts setting an ambitious mean target price of $15.21. This target reflects the market's confidence in the company's growth trajectory and future prospects. Applied Digital has demonstrated remarkable performance YTD, with an increase of 138.59%. This robust performance is a strong indicator of the company's market position and its ability to capitalize on industry trends. One of the most striking aspects of Applied Digital's financials is its EPS growth, which stands at an impressive 200.00% this year and is projected to continue at a similar pace of 200.82% next year. This growth is indicative of the company's strong earnings potential and financial health. The company's quarterly earnings have seen a staggering growth of 424.60%, a testament to its operational efficiency and strategic business moves. Applied Digital recently made headlines on November 20, 2023, when its stock saw a significant uptick of almost 9%, outperforming the S&P 500 index's gain of 0.7% on the same day. This surge in stock price can be attributed to key developments in the AI industry and strategic changes in the company's leadership. The company announced the appointment of Kate Reed, a seasoned IBM executive, as an independent director on its board. Reed's rich experience at IBM, including roles in Red Hat, cybersecurity, and the Watson platform, is expected to bring valuable insights and direction to Applied Digital's growth strategy. In conclusion, Applied Digital Corporation emerges as a compelling investment opportunity within the small-cap space. Its focus on data center operations, critical in the era of AI and big data, combined with strong financial growth and strategic leadership appointments, positions it as a stock with significant growth potential. Investors looking for exposure to technology and data infrastructure sectors may find Applied Digital an attractive option. As we conclude our exploration of these top 5 small-cap stocks, we've seen a range of innovative companies poised for growth. From the healthcare sector to technology, each has shown potential for significant advancements and returns. Remember, investing in small caps carries risks and rewards, so continue your research and stay informed. Thank you for joining us on Stocks Telegraph and stay tuned for more investment insights. Happy investing!